Hey, hello traders, welcome back to my channel. I hope you are doing great. I hope you are preparing for the new week. I believe you were able to capture some good profits from the last week trade, which was very super and very exciting because we captured a lot of nice trade, which was very good to see. And this week I'll be sharing another great strategy which is going to be useful for the community, and as far as the trading community is concerned, you will be able to benefit from this trading strategy in real time, because these are current markets which are happening now. You can see this currency pair, which is AUD JPY, giving a nice signals on the chart. So this is a very nice opportunity to capture some good trade from the market. So if you can understand this strategy, is something that will really help you to build your small account. Even if you have because I've gotten quite a few questions from people asking how much can they use to start trading. From my point of view, you can start first. Try to understand that the market is something that is very big. So first I will advise you to start with a demo. Once you do demo trading for a couple of months, and you are able to understand the strategy which you are using, which we have shared quite a lot of strategies on this channel, then you will be able to start. You can start with as little as $100, and with that you'll be able to test the waters and be able to understand how to follow the market. So following the market comes with experience. As you know, in everything that one is doing in life, the more experience you have, the more you'll be able to build on what you are doing, and the more you'll be able to profit from the market. So in today's training, I'll be sharing with you this TradingView indicator called RMI Trend Sniper. So this indicator is available for free on TradingView. Whether you are using a free account or pro account, you can easily add this indicator to your chart. As you see on my chart, you just add the indicator, just take this name, search from indicator on TradingView, and you'll be able to add it to your trading chart. Leave the default settings, because the default settings are working very well. So with time, when you have more experience, you can try to tweak the settings, which is fine. So this black indicator, which is showing on the chart, is our entry fragas indicator. We are using a settings of 200-day moving average. So because we use the 200-day moving average for us to know the direction of the market, once price is, as you see from this region, price is trading below the 200-day moving average. So this tells us that we are currently in a downtrend. Okay. So this is the first thing you need to understand in the market, because we are looking for edge in the market. Anytime you are analyzing the market, try to find the edge in the market, because the market is something that you cannot predict. We are all just making probability of the direction of the market. So the more you try to have an edge in the market, the more you'll be able to capture the opportunity that comes up in the market. So from here you see that once we have our entry fragas telling us that the 200-day moving average is above the price, so we have the confidence that we are currently in a downtrend. So once you are in a downtrend, you now move down to our indicator to take either a buy or a sell, which is our RMI Trend Sniper. So the RMI Trend Sniper will give you, when you have this red, when the indicator change from this blue, light blue to red, you know that you have already moved from up to down. So the blue giving you a buy signal, the red is giving you a sell signal, as you can see on the chart. So but once we know our directional bias, which is the 200-day entry fragas, so we know that we cannot take anything. Like here you have a buy, you cannot take this because this is a wrong signal. It's against the trend. But here, at this point, you get a sell signal. This is a very nice opportunity for you to enter the market at this point. Once you get this signal at this point, you enter the market. And how do you manage this trade? When you enter the market at the close of this candle, your stop loss will be at the edge of this signal. So, and your take profit is 1 to 3. In this strategy, we are taking a profit using 1 to 3. Okay, so if we are risking, for example, you are risking if the distance from here to this point is giving you 20 pips. Okay, if you have 20 pips at this point, so your target should be down 60. You'll be targeting 60 pips. So this is how we trade this strategy. So understand how you follow. You wait and make sure that first you have your entry flaggers telling you that the current trend is either up or down. In the current market, we are in a downtrend. So once you have this, all you need is to wait for the RMI trend sniper to give you a sell signal. Once you have this color change from light blue to red, you know that you are currently getting a sell signal. Then you open your sell and you place your stop. Because I've gotten a lot of queries regarding setting the stop. Some people give a comment that they prefer to just open the trade and move with the trend. That is very dangerous because it's like opening your shop and you fail to lock it when you are not looking at the shop. Because when you place this trade, you can see price keep moving. There is no way you can glue to the chart to be monitoring the trade. And in the market, something can erupt, any news can happen at any time, and you might see after analyzing the trade and everything is in your favor, all of a sudden the price will move against you. So if you don't have this, your stop loss is a very big risk in the market, because you can risk losing all you have made and also lose your capital. So also always ensure that you place your stop. So once you have your stop, your target should be 3 times your stop loss. So this is how you manage this trade. So let's just walk through to see. You see at this point you have the same signal you have at this current particular point. You have here the first indication is correct, that the EMA, okay, is giving you a sell opportunity. The EMA is giving you a sell opportunity. So the next thing you look is to get a sell opportunity from this RMI trend sniper. Once you have a sell opportunity from here, you open your sell and you place your stop at the edge of the signal and you ride with the trend. Then you see at this point again, you have the same scenario. You get your signal. Once you have this signal, you open your sell, you place your stop at this edge. Once you get opposite signal, we always advise, once you have opposite signal, exit the market. If you are not trailing your stop, try to exit the market, because you don't know what will happen in the market. At this very particular point, when we have this opposite signal, market can reverse from here and move against you. So if you just think that you can just open the trade and you leave it like that, that is very risky. It's very important to understand that, because making money from the market is one thing, is for you to have a good strategy. Another thing is for you to be able to manage your trade. If you are not able to manage your trade, you might have a very nice strategy, but you will still be losing money from the market. So let's have a look at another currency pair. This is a CAD JPY. You can see the same thing is playing out here. So from here, I like to look at the current market so that you understand how the market is moving. You see here you have the first signal, which is telling you that the EMA is giving you a sell signal. Now that you have the EMA giving you a sell signal, the next thing you look out is to see that you get a sell signal from this indicator, which is the RMI trend sniper. Once you have your sell signal from here, you open your sell trade, and as usual you place your stop here, and your target should be 1 to 3. Then again you see from here you get another signal here based on the same concept. You have your EMA already showing you that the current market is in a downward trend, and you have at this point that you are getting a signal from the RMI trend sniper giving you a sell signal. At the close of this candle, you open your sell trade, you place your stop here, your target 1 to 3. So your target should be around this point for this particular trade. Here you get a signal where you have this, which the price is above this moving average, and you can see clearly that this is up above the moving average, and you are moving in the proper direction of the current trend, looking at the trend from behind, and you continue to enter your trade. Once you have this signal here, the moment this candle close, you open your trade, you place your stop here, and you continue and place your take profit 1 to 3. So in this trade, you continue to move with the market. You see here again at this point, you get a signal for sell, okay, which is against the trend. And you see here the price is still above the moving average, which is clearly against the trend. And here you get a buy signal, which is in line with the trend. And here is your stop. So you open your trade at the close of the candle, which gives you the signal, and your take profit is 1 to 3. So in this trade, we might end up with a break even. And this is where we emphasize much on managing your trade, because if you have placed a static stop without moving, trailing your stop as the market is moving, you can see that here there is a very big news which happens in the market. This is clearly what we emphasize. Maybe you are not watching the chart when this news happens. You see only one candle has already covered all the profits that you might have made from here. So this is why it's very important to manage your trade, because if you are managing trailing your stop as the market is moving in your direction, you are trailing your stop. When this news happens, which happens all of a sudden, you'll be able to capture some pip and you'll be stop out on the way. So this is the best way to manage trade, and this is the best way to make money from the market, because not like looking at the charts, there are a lot of things that happens in the market. Emotion is there, having a psychological mindset to manage the trade is there. So these things are things you need to keep updates and you need to keep in touch with, so that you'll be able to understand how the market is moving and be able to capitalize on the advantages that come from the market. So I believe this strategy is very simple and is very easy for anyone to understand. In case if you are finding any challenge getting the strategy, just watch the video and pay attention. You'll be able to follow it. It's very simple. All you need is to make sure that you have your directional bias, so which we always emphasize on. This is the first thing you need to do. Make sure that you know whether the price, the current market is downtrend or the current market is uptrend. Once you identify your directional bias, so this will give you the opportunity to know which signal to take. because if you are just taking any signal that comes on the market, you will lose touch with the market and you lose your money. So note this and you'll be able to utilize this strategy. Leave a comment in the comment box below. Tell us what you think and how you see this strategy. We'll be coming up with more strategies for the community to benefit from, but stick to any of the strategy which we have shared so far that you can really understand and will be able to benefit you in your trading journey. I wish you all the best in your trading. Thank you.